Welcome to the Chartered Banking Institute's annual banking conference. My name is Joanne Murphy, and as Interim Chief Executive of the Chartered Banking Institute, it's my very great pleasure and privilege to introduce the second of two short days discussing optimising banking in a digital age, people, professionalism and technology. Our session today builds on yesterday's topic, led by Edward Ling, Chief Executive of the Asian Institute of Chartered Bankers, who spoke so eloquently about the roles played by people, professionalism and technology in enhancing banking in this digital world. This was followed by an excellent panel discussion chaired by our esteemed fellow of the Chartered Banking Institute, Eric Lenders, who looked at how banking leaders are navigating the bank of the future. From an Institute point of view, it was very pleasing to hear how the conversation touched on the Institute's three key themes of professionalism, expertise and community, as the panellists informed attendees about the use of AI-driven technology in their own organisations. Today is all about how we make organisations more intelligent in an era of digital transformation, and we have two great panel sessions lined up. Our first panel is chaired by Dr. Heather Melville, OBE, who is an honorary fellow of the Institute and has a career spanning over 40 years across financial, professional and technology services. Heather's session will be exploring how the opportunities and risks of adopting emerging technologies at scale with financial organisations, whilst ensuring customers do not feel excluded from the process. This will be closely followed by our second panel, led by freelance journalist and former editor of The Banker, Joy Knight. Joy is a good friend of the Institute who has written extensively on banking and transactional banking and technology, and along with her panellists will be examining ethical leadership and decision-making in the age of AI. Before we begin, I wanted to start by giving you my own thoughts on this important topic and the role it will play in shaping professionalism of banking tomorrow. Clearly, the opportunities AI presents for streamlining processes and reducing costs, alongside identifying better service solutions for customers, potentially before they're even aware they need it, suggests a win-win for banks and consumers. However, change can bring challenge, and a healthy level of professional scepticism and critical thinking will be essential if we're to successfully leverage the value of technology without diluting customer relationships and potentially the trust in our profession. Banking, after all, is all about relationships. Professional skills will be required to ensure bankers remain curious and inquiring. For instance, considering where the data has been sourced from, critiquing how it's been gathered and analysed, and how we can ensure there's no unintended bias. Applying ethics to digital cannot be approached solely with a framework or code. It's essential that professional competencies, knowledge, and sound judgment will be critical. It means stress testing new technologies for threats, so that we are not simply seizing opportunities in return for unintentionally increasing the risks to our financial systems. It means also ensuring that new technologies are built for inclusion, built for all, and the role and need for highly skilled professionals will therefore be greater than ever. That said, the technologies arising from digital and AI transformation in banking clearly have plenty of benefits for banks and bankers of tomorrow. But challenges they bring serve as a timely reminder of the value and importance of the people who work in banking, whether they see themselves as bankers or not, of custodians of trust, and as of the drivers of future stewardship for responsible banking profession. The technological and professional expertise of these individuals will be the real differentiator for responsible banking for both in our communities and more so globally. To navigate the complex and evolving landscape, the Institute helps and equips our students and members to investigate and answer these complex issues, particularly by studying subjects such as our certificate in digital and AI, which helps develop learners' knowledge of digital AI and automated banking and the role of fintech. Ultimately, it's people, together with the professional skills and expertise, who will ensure our technologies will improve banking in the future for all. And that's what we'll be exploring further at today's conference. On that note, it's now time to move on to today's first panel session, which is chaired by Dr. Heather Melville. Thank you for listening. I hope you enjoy today's conference, and it's over to you, Heather.
Today is the 9th annual banking conference, which will really focus around leadership and embracing digital transformation within the banking sector. Today, I want to talk about with AI and technology merging across the sector, it's so critical for financial organizations to consider how to become more inclusive and reflective of their customer base. I have an amazing panel that are with me today that sit right across a range of different businesses, but of which technology, AI, are a very important part of their businesses. So I'm joined today by Anja Hannes, Group Head of Sustainability at Nordea Bank, Sudeep Gupta, Global Managing Partner at IBM, Paul Risborough, Partner at Banking Payments at Capco, and Karen Diwar, Interim Chief Data and Analytics Officer at NatWest Group. What I think is quite interesting, there are two companies on here that I've worked at some point in my career. One's NatWest and the other one's IBM. So I want to start with some of the questions that we all have today. Karen, what are the opportunities and risks of adopting emerging technologies at scale within financial organizations, specifically in the terms of customer inclusivity?
Oh, thanks, Heather, and thanks for your previous service, I think I should say. So Joanne covered, I think, some of this in the introduction to today, as she chatted about emerging technologies being a win-win for both banks and for consumers if used with, and I'll borrow her words, good judgment. And I think that if we look at the opportunities for emerging technologies, and I make no apology, I will be data-centric in my answer. Often we see that they are characterized as things like efficiency, so streamlining processes, reducing manual tasks, or better decision-making, so leading organizations to informed, data-driven decisions. But actually, alongside the development of new products and services or the ability to scale offering at low marginal cost, I think there's real benefit in customer experience, and that specifically leads to an ability to lead a more inclusive, indeed a more personalised customer experience for all customers of financial services institutions. I think that it also poses an opportunity for us to do better when we think about sustainability. And for us, as we're all on a virtual panel this morning across Zoom, even before we start to use augmented reality, it helps us collaborate better. So it gives us almost a more inclusive environment for all of our colleagues and all of our teams. So I think there are definite opportunities from emerging technologies, not just for customer experience, our bottom lines, but also being more inclusive and indeed more responsive to the wide variety within our customer base. But I do think it's important that we do this with sound judgment. And I think there's a number of risks that come along with this, which are standard change risks around implementation, around data privacy, which is clearly the thing that keeps me up most nights, but actually even around things like skill gaps. I think for those of you who have young people going through our education system at the moment, we have terrifying statistics around 28% of the roles that are currently available today will not be available in 5 years. And actually almost 60% of the roles that they will be doing haven't been invented yet. So there's this whole massive change dynamic, which presents an opportunity for upskilling people in new skills that we will need in the future that we don't need today. So I didn't know, Heather, if it was worth bringing it to life, maybe with a little bit of the work that's been done within NatWest, both on the kind of what do we see as the opportunities, but also what do we see as some of the risks. And actually specifically touching on kind of Gen AI as it emerges with technology. We have been using AI quite successfully for several years. If you have the opportunity to be at a barbecue with a data professional, they will roll their eyes when asked the question around Gen AI, mainly because this is a journey that we've been going on with artificial intelligence, with machine learning for a number of years. But I think that we do see AI and Gen AI as the real Trojan horse where we'll be able to genuinely improve personalisation for our customers and to address key concerns around inclusivity. Applied well, we think it'll help us manage risk, protect the bank, and better protect customers. So things that we've been doing, and bearing in mind that today around 18% of the bank's current analytical models use AI, it's embedded within things like our chatbot, Cora, in our app, which handles around 10.8 million customer conversations a year. And 49% of those are now undertaken without any human intervention. But it also does things like assist us in financial crime and fraud detection, which is where you might expect to see it. So we've got around 6,000 colleagues who use AI to identify trends to both educate and protect our customers, especially those who are most vulnerable to falling victim to crime. And then kind of one of the other areas that we're using it in is more around that financial vulnerability. So it helps us with financial health and support. So a model was introduced in 2022 across mortgages, loans and current accounts to help identify customers who would benefit from extra support and extra education. And so far, almost 400,000 customers have been helped in this way. So hopefully we can start to see there is genuine application that we can do better for all customers, but specifically improve our inclusivity and better tailor our support to vulnerable customers if we are cognizant of the risks and indeed do this with sound judgment. So listen, I genuinely, I could talk to you for hours, but I will pause because I'm conscious there's a number of questions.
Thank you. Anja, I would really like to understand from you and your perspective on how can organizations implement sustainable and responsible banking practices in the age of AI with a specific focus around education and training.
Yes, thank you, Heather, and thanks for having me. And I can just build on what Karen was just saying about building an inclusive culture of working with the customer base. I think for us in Nordea, responsibility and high ethical standards is really the foundation for how we work as a sustainable bank. And we always have the customers in focus, of course. And we can use data and AI to automate our internal processes, just as Karen said, and improve the customer experience. And this is actually a really good use case for AI. And we can also use machine learning to reduce our risk exposures, to predict future events related to climate and nature-related risks that we are exposed to. We can use it to develop risk scenarios, which is also something we can use to help our customers look at their transition plans and make informed decisions about their futures. So this is also super strong use case for AI and machine learning. But to your point around education and training, I think that we as a service organization, under a lot of regulation, both internal and external regulation, AI can also be used as a booster for our employees. So to help us providing timely, relevant information to our customers and making informed decisions. So we can, for instance, use AI by having an internal chatbot where we can ask questions about financial information, sustainability related data, where we have a lot of data points. And sometimes in a situation where you're facing a customer, you might not have all the data top of your mind, and you can then use these internal tools to build your own competence and to be able to give quick answers to customer in a situation where you are facing customers and you need to make a quick decision. We can also use AI to search in our internal documents. If you as an employee want to have support in how to do the right thing, what to do in a certain situation, you can search text within regulations and our multitude of internal rules and policies to make it easier to do the right thing at work. So this is also a super good use case. However, I think it's also important to highlight that being responsible and having high ethical standards in this context means also being critical and really not leave the thinking to AI. So the humans in the organization make the decision and do the thinking, and then the data can be structured and provided by the AI tools. And of course, also back to Karen's point, the privacy angle, we always need to take into consideration, make sure that we have processes and controls in place to ensure that we do not breach any customer privacy or any other data regulations. So that would be my take on education and training from an AI perspective, from my sustainability angle, to say.
Thank you very much for that really detailed overview, and something I know you'll all be quite interested in following up on. Sadiq, what I'd like to ask you as the Global Managing Partner for Banking at IBM is, how can organizations build an inclusive organization which is reflective of their customers, with a real focus on building products that suit their customer needs? So there, once again, the whole inclusivity thread goes right along all of the things we're talking about today.
No, thank you, Heather. This is a very relevant question for banking today across most markets, and a tough question too, as there's no right answer. But building on some of the points that Karen had mentioned earlier, but trying not to overlap, I believe to meet the diverse needs of today's customer, banks clearly must have to start with being able to offer inclusive products that cater to the diverse customer segments, leverage technology, foster financial literacy, and ensure equitable access. First, of course, on the point of being able to provide tailored financial products for diverse customer groups, this is an imperative that banks must address. Things like gender inclusive products, low interest loans for female entrepreneurs, financial independence programs, alternative credit products for those with no traditional credit history, disabilities inclusive banking platforms with accessibility features like screen readers, voice navigation, loans for purchasing assistive devices. For younger customers, no-fee accounts, savings apps, micro-investing tools, collaborations and with nonprofit organizations, social impact investing, microloans to help customers improve their credit scores and drive financial inclusion in the process. Just a few examples of inclusive products and offerings that come to my mind, and that those are being offered by banks today. Now, these, and building on Anya's point around sustainability, that's another facet of inclusive banking, which is responsible banking, as evidenced through the growing eminence of green lending products like green mortgages, green business loans, and indeed sustainable investment funds. Now, these new products usually pick up pace in the market I've seen only when they're backed up by customer engagement and communication strategies, which also actually reflect today's diverse customer journeys. So be it accessible branch and ATM locations, or multilingual services in branches, contact centers, and digital channels, inclusive marketing campaigns, inclusive customer support processes, dedicated advisory teams for target demographics like small business owners, elderly customers, or indeed first-time investors. Coming from IBM, technology, I believe, has and will continue to play a pivotal role in the introduction of inclusive financial products and services. Digital platforms are already playing a massive role in bridging the digital divide. It, I think, also provides a level playing ground, I believe, a perfect marketplace for banks to compete in terms of providing the best services for their clientele. Automation and AI, much has been already talked about it, is enabling banks to accelerate design, development, testing, and launch of new financial products at rapid pace in response to changing market trends. Bank-wide adoption of cloud enables scaled operations, more resilience, higher agility, I'd say a lower cost to serve. Big data analytics has already been in play for a while, which allows banks to identify underserved segments, better understand customer behavior, create personalized financial solutions. Predictive AI models have also been at play, which help predict financial behaviors, identify potential fraud, and also helps ascertain the best credit solutions for different customer groups. AI-driven customer support is another big transformation in progress. Virtual assistants and chatbots are nowadays providing 24/7 support for customers for many banks, answering a wide range of queries and with increasing levels of accuracy. And most recently, of course, generative AI has come in very handy for, for all banks for a variety of mid-office activities such as complaints handling and KYC, reducing the cost to serve and improving the service throughput at the same time. But I think inclusive banking is also about financial literacy, and banks today are increasingly offering workshops, online resources, online mentoring, interactive tools that can help individuals from diverse backgrounds better understand and manage their finances. But an inclusive operating model should, of course, function within the guardrails of regulation related to fairness in lending, regulation related to harmonization of classification of, for example, green lending products, operational resilience, as well as data protection regulations such as GDPR, to name a few. And I think banks are taking a step beyond regulation in terms of being inclusive. They're also now beginning to explain to their customers how their data is being used and providing them with easy access to both the process and the decision for complaints and disputes. But banks are also organizations that are trying to achieve the purpose of being truly inclusive. For that, and that is, I think, as important as having the right set of inclusive products and services in the market. And that boils down to three things. Quickly, one, for me, it's the most important is fostering an inclusive workspace and culture within the bank through things like bias-free hiring processes, forums such as employee resource groups, inclusive benefit packages, having a robust monitoring and feedback mechanism through customer feedback loops, bias audits, and driving, bank-wide leadership commitment through DEI reporting, and indeed celebration of inclusion-related achievements. So in summary, I think building an inclusive culture that reflects the diversity of their customers isn't just a moral imperative for banks, but also a strategic advantage. So a slightly long-winded answer that was, but I hope that partially answers your question.
Thank you. It definitely does. And this brings me nicely on to Paul. Paul, please share with us, how do you think financial institutions can strike the right balance between pursuing a technical innovation and ensuring a user-friendly experience for their customers of all ages?
Yeah, thanks, Emma, and morning, everyone. Good to be here. So look, I spent most of my time in industry before joining Capcare, and I think the most important thing is you've got to have that sort of customer-centric design approach in the firm, and that means that the things you develop should be rooted in customer needs. The two can get very divorced sometimes in organizations, if we're honest. I think ensuring that you have that kind of center of gravity around what the customer interest is, and that is backed by customer insight is super important. I think sort of incorporating user feedback early in the development process is important. Regular usability testing. I think now, in a world of consumer duty in the UK, I think things like actually reaching out to end user groups, particularly those that are vulnerable, and understanding how what you're developing will impact them is becoming super important. But fundamentally, this is about intention. When you're developing something new, a product, a service, as Sadiq was saying, or you're putting in a new piece of innovative technology, it's really, what are you trying to achieve with that? And can you really look yourself in the mirror and say, I've thought about the customer in this? And that is a question, I guess, really of sort of ethics. I think that's particularly interesting when you get into things like personalization, because the temptation is to think that personalized offerings, personalized engagement is a good thing. And I think, things like AI allow that, and that's kind of interesting. But at the same time, I think it's important to be transparent about that with customers, about how their data is being used, because that fosters trust. And customers are much more likely to feel cared for by aspects of personalization if they understand what's going on and they understand how you're using their data and to what end. I think also there is this risk as we use more intelligent technologies across points where customers interact with financial institutions, that it actually adds more complexity. So I think there's a general sort of yardstick around, if it's reducing complexity, if it's making things simpler, then for both the organization and the customer, onboarding, loan applications, account management, there's lots of examples of that, making things faster, easier, intuitive, that's good. But there is the downside risk that actually things become complex, hard to understand, and I think that's a guardrail that organizations need to think about. I think also and this is something we see in a lot of the work we do, the importance of just keeping a human in the loop. And by a human, I mean a colleague. Chatbots are great, virtual assistants are great, but when you get to things that require some sensitivity, it might be a fraud case, financial crime, complaints, issues around vulnerability, then having that human in the loop to use their judgment is really important. And using these intelligent technologies to take away some of the commoditized tasks that are taking up colleague time, perhaps, in order to give back time, so that they can have that ethic of care with customers, seems to me to be really, really important. And figuring out that balance when you're designing and implementing new technologies, that's an important consideration, I think. Finally, I'd just sort of say, I think just this ability to get this flywheel of constant customer feedback is really important as well. We're in a world now where we can develop things a lot quicker than we could before, and put new products and services live more often. What often doesn't get fed back in enough is just what customers are thinking and feeling about what you're doing. And I think getting that kind of feedback loop to work and be robust is super important. So just a few thoughts, Heather.
Thank you. I think one of the things that's very consistent in all the questions that I've asked all of you is the customer link in all of this. And so often we hear that banks, financial services, organizations just create platforms and systems without considering the end user, which is ultimately the client. And this is evidence, just the kind of topics we're talking about today. And I'm convinced that we could go on for much of the morning while we delve deeper, but I'm not gonna let that happen. But Karen, I am going to ask you, how have organizations developed different approaches that have set a standard of improving accessibility for clients with diverse needs, including those with disabilities or language barriers?
I think it's a very real challenge, and actually I feel that as a panel we do reinforce the points that we've made, so I'll probably reinforce some of Paul's points. I mean, there's no doubt that advances in technology mean we have the potential to reach customers with diverse needs. And I think if we think about this in three chunks, how we design, how we provide accessibility, and how we assess is probably the kind of three core topics. If we think about design, and we've touched on this, when we're designing processes or systems, it's imperative to include people with disabilities, vulnerabilities within that process. And in part, the secret to this is by pursuing, I believe, a really strong and rigorous diverse equity and inclusion recruitment process, and ensuring that the makeup of our teams reflect our customer base. And that's the best possible way to really hook into the insight around what will and will not work for our customers with diverse needs.
I'll just interrupt you for a minute, because I think that's such an important point. In today's world, we see lots of people who are visually impaired, but we also see lots of people who have ADHD. And knowing that you are taking this into consideration when you're developing the products and services, I just think this is a really important point for people to understand, because these are things you can't see sometimes, but they're very clear.
I could not agree more. And in fact, I'm a passionate advocate, and you might expect me to be a passionate advocate because I currently lead the data analytics organisation. And I'm proud that 17% of my team are neurodiverse. And actually, that makes for an extraordinary working environment, but it teaches really good practice and discipline, even within collaboration, that we can then take forward to use with our kind of customers. But I think, and I'll come back to that point actually, Heather, if that's okay. But then I think we can also put systems and processes in place. And one of those is around obviously using kind of customer design leads or UX within our process design. But again, as Paul said, we then have an inclusive design panel that checks all of our design before it even goes into test. So actually bringing people who have some of the diverse needs that we see in our customer base into the design process means that we're not reworking in the future. It makes good business sense. So genuinely, in process design, start with a DE&I representative team, use your experts to come up with design, and then test it with a panel, I think is probably the most straightforward that we've seen. I am just going to go on a side tangent to say use of language, also one of my extraordinary passions. Despite leading a data organisation, my undergraduate degree was actually English. And I hold dear to the fact that in the UK, the average reading age is 11 to 12 as we stand today. So anything that does not have simple language will not achieve the goal. And by thinking about this in design, it helps us with those people for whom English is their second language. So I think that when we're thinking about design, it's not just the steps or the digital experience, it is also what is the language that we're using. Is that accessible and comprehensible at a very, very low reading age, which is the most appropriate. I think the second point I mentioned was accessibility. So yes, the digital world can be viewed as inaccessible. So in advance of today's panel, I was doing some reading around the subject. And Web AIM shows us that over 95% of homepages today currently have a critical error, as in that they are not readable by people with, for example, sight challenges or specific visual needs. And I think that we need to do better to improve accessibility. I completely support digital plus human as a service proposition, but I think that we must meet the standards that we know are required for everyone to use it. And then lastly, I think coming back to Paul's point, I think we should undertake assessment. And actually one of the things that we've been able to do using GenAI is run tools over our written communication to check for reading age, and almost kind of traffic light, if it's not too offensive for people in the morning, red, amber and green, how understandable that communication is using AI. So very fast, very quick turnaround to actually just say, we're assessing what we do and whether or not it's comprehensible. So yeah, I think there are simple actions that we can take, but I do agree with you, Heather, it starts by having a DE&I team.
Brilliant, thank you. Anja, I want to go back to you because we talked about sustainability and responsible banking practices in the age of AI, but really, how does this link to professionalism and wider commitments to responsible banking practices?
Well, I think we have touched upon already the privacy angle. So we really want to look out for our customers, and we are keen on protecting their integrity. We gather a lot of data, so we learn a lot about our customers just through them using our systems and our accounts. But this, of course, needs to be used wisely. And our ambition is also to make sure that our customers build financial resilience. So even though we might use artificial intelligence to generate business proposals, etc., we need to take into consideration each customer's specific needs and risk appetite. And we need to remember that these are humans and they have different preferences and different appetites, and you cannot know a customer's behavior based on previous behavior by similar individuals. So that needs to be taken into consideration. I think another point that's really important, we talk about customer focus, and to clarify what we mean by that, it's not what we as a bank want to focus on the customer. It's actually, what does the customer need? For us, we grant loans and help customers with investments every day, a number of occasions every day. But for the individual, this might be a once in a lifetime thing and a really important life-changing decision. So we should not underestimate the value of the personal relationship in that context. So what we can do in making sure that our internal processes are efficient enough so that we can spend more time with being there in these sensitive situations where the customer really needs a stable and a supportive banker who helps them through the life-changing decisions. I think that's where we can really add value and also build a strong relationship and build our customers' resilience over time. So just being aware that we use the data to be more accessible, both to customers that are vulnerable in different contexts, but also to the increasing expectations of customers of us being quick with our responses, being available 24/7, being available in all different languages, being really flexible to our customers' different needs, that we can support. But then coming back to these individual cases where the customer really needs support by a strong financial partner in making these important decisions for their private or maybe corporate finances. So I think that's the balance we need to strike. Where can we actually, as humans, add value, and where can we add value through automated processes and smart data analysis?
Thank you. Sadiq, I'd like to put this question to you, actually, just given the work that you've been doing. How do you think customer expectations are evolving in response to emerging technologies? And how should organizations really try and adapt to these changes?
Very interesting question. I think the interplay between emerging tech and evolving customer expectations is a topic of huge interest, I'm sure, for almost every bank in the world. And customer expectations are indeed very rapidly changing in response to emerging technologies. And as these technologies evolve, customers are demanding more convenience, more personalization, more security, I'd say more transparency and more control. So over the next a few minutes, Heather, what I've tried to do, it's a tough question, so I've tried to break it down to 3-4 themes that may resonate, what the customer expectation is and what the associated technology play is or could be. So the first thing that comes to my mind is a demand for seamless 24/7 access. And with the rise in digital banking and mobile apps, customers now expect to access banking services anytime, anywhere, using any device. And I'd say many of the larger banks, especially in the UK, are already offering 24/7 mobile banking apps. Equally, digital-only banks, both here and in Europe, are providing nearly full stack of retail banking services without need for any physical branches. And in continuing to provide such seamless and continuous access to customers, I'd say the two key technology imperatives for banks are, one, to continue investing in their digital infrastructure, like enhancing their mobile apps continuously, and ensuring, of course, that their core banking systems remain integrated with these new enhanced digital channels that they're putting in place. Otherwise, it's going to break the journey. And also, the second point is about adopting and scaling cloud solutions, like I mentioned earlier, at pace to be able to offer more flexible and cost-effective solutions in line with market trends. The second theme that comes to my mind is personalized banking experience. And I'd say nobody probably would disagree that banking consumers today expect the same level of personalization they get from the likes of Amazon or Netflix. And the challenger and neobanks are already heavily using AI/ML, which is artificial intelligence and machine language techniques, to analyze customer behavior and provide personalized financial solutions and advice. And larger banks are also catching up. And what I see banks doing in this front is continuing to aggressively deploy AI/ML techniques, including generative AI, to improve accuracy and throughput for a range of front office and mid office activities. Also utilize alternative data approaches for credit scoring, KYC, etc., which I'm sure Karen would agree. I mean, traditional approaches are now kind of coming to an end in terms of what they can achieve. And this may unlock a whole new market segment. The third point I had is around security and privacy. And with increasing digital banking footprint, customers are rightly expecting a robust set of security features that protect the sensitive data from things like fraud and identity theft. And stuff like, we're already experiencing things like biometrics and multi-factor authentication, MFA, to secure our accounts, blockchain to ensure transaction traceability. These are but examples from a comprehensive suite of cybersecurity and resilience measures that banks are heavily investing in. And the trend is very clear that regulation and customer expectation will continue to drive significant investments in cybersecurity and resilience. Customers today are also expecting speed and efficiency of service like never before, and with minimal paperwork. And going back to these neobanks and fintechs, they have really raised the bar and shifted the standards in terms of how quickly financial services get delivered. And I'd say probably everybody in this group here are already account queries and interbank transactions, trade settlements, etc., already on a real-time basis. But the interesting take on speed and efficiency is that it is, in my opinion, not just an NPS booster for banks, but it's also one of the key contributors to lowering their cost-income ratios. So I think we should expect banks to therefore continue on the extreme automation journeys for routine processes like loan approvals, account opening, etc. And meanwhile, also integrate real-time payments with banking journeys to enable instant fund transfers, etc. Three other key objectives I'll summarize into one. From a customer delight perspective, driving full transparency for customers in terms of how their money is managed, the fees they're paying, how the data is being used, providing them a greater control on their financial decisions, and providing a seamless omnichannel experience that ensures continuity across all touch points, be it the contact center, the branch, and also digital channels. This essentially means having the right systems and integrations in place to share data and provide a unified journey across these channels. And there are two principal technology levers that will help achieve these objectives. One, of course, is embracing open banking, and most banks are very well progressed on that journey, and that provides the customers a broader view of the financial landscape, and also integrating digital in-branch and contact center services. So, but before I conclude, there's one more important point to note, Heather, which is circling back to our earlier discussion on inclusion. Not every customer, as we go through this whole, I would say, mechanization and automation and digitization of banking services, not every customer would be at the same level of financial or digital literacy. And not every customer journey can be served through a templated approach. So as has been discussed by the panelists earlier, I think banks can achieve an enduring and systemic market advantage only if they underpin their customer acquisition and servicing strategies with some purposeful financial and digital inclusion solutions that addresses the diversity of their customer base. So in conclusion, I think to meet the expectations of today's tech-savvy customers, banks must continue to embrace digital transformation like AI and technologies like AI, cloud, mobile payments, blockchain, cybersecurity, open banking. And adapting to these changes, I think, will only make banks have a much more deeper, much more meaningful relationship with their customers and with a diverse set of customers. And therefore, that will in turn build a systemic, enduring competitive advantage for them in an increasingly digital world. And so I think that's my take on this question you had regarding the interplay between emerging technologies and evolving customer expectations.
Thank you very much. Thank you very much. What I want to say, just to our audience that are listening, you have heard a lot from our specialist on this call today, and I really want you to start thinking about the questions that you want to ask. I have one more question that I'm going to put to Paul in the few minutes, but before I do that, I just want to get you ready to start thinking about the questions. And what I will say is, when you send in your question, please say which organisation you are from. It's really important for us to be able to gather that, so we're helping each other. The reasons that the Chartered Banker puts on these calls is really a font of information for us to really share information, which for me, as I'm sat here this morning, I'm thinking, whoa, this is a whole different world that I hear about, but hearing it firsthand from all of the experts in this field, for me, makes it even more exciting in terms of the conversations I have with my clients. So Paul, you will be the person in between us and our first question. I think there's a couple of hands that are going up. But how can organisations effectively integrate advanced technologies with human expertise to enhance the decision making and foster innovation while ensuring ethical consideration and employee engagement are maintained? That's a big question. So I'm happy to break it down if it makes it easier for you. So I think the integration of advanced technologies with human expertise, this is something that we know is being talked about quite a lot at the moment. Maybe if we could fit that part of the question first, and then we'll go on to the other parts.
Yeah, look, I mean, I think I can take it in a one. I don't want to stand between us and the questions, but Look, I mean, this isn't a binary thing. I think it's the first thing, right? This is about judgment. This is about getting the balance right within organizations, and that requires leadership. That requires thinking things in broad ways. I mean, advanced technology, and I guess we're really mainly talking about things like AI here. They're there to support decision making rather than replace it. So I think having humans in the loop, as we said earlier, is super important. But human judgment, I think, particularly when you get into complex areas that are customer decisions, complex financial decisions, I think having guardrails around where there are clearly kind of ethical and contextual boundaries to what you're deciding on is super important. I think the second thing I'd say is one observation from the work that I do now, and having come from industry, is that a lot of organizations tend to put new technologies in, for example, solutions that leverage aspects of AI, and they'll train their colleagues to use that particular piece of technology or service or whatever it ends up being. But the general awareness and general training in some of these intelligent technologies is harder to achieve at an organizational level, particularly when you're really large, right? And you've got a lot to do as an organization. But I think the more that we can empower employees with broad training and understanding of AI, particularly to kind of spot where things may not be right, to spot where we might be relying too much on the technology, I think is super important. So that investing in upskilling, I think, and not in a narrow sense, is really important. I think having those clear ethical guidelines, most organizations now have good, clear policies around AI and models and model governance and all that kind of good stuff. But I think regular kind of ethical reviews around AI-driven decisions within an organization is going to be super important. I guess I'll sort of close by saying two final things. One is there's an operating model challenge for organizations here, because really you want to encourage cross-functional collaboration. You want data scientists bumping into people that work in a branch. You want technologists bumping into commercial lenders, because that is where innovation comes from. It's where more customer-focused design comes from. But there is an operating model challenge there, because a lot of big organizations are quite siloed. So when you get to that kind of cross-functional operating model, value streams, platform orientated type organizational models, they become very, very important, ensuring that actually you've got that kind of understanding, not just from the data scientists, but all the way through to the front line around the impact of the technologies that you're putting live. And I guess final point, that kind of means you've got to foster that culture of sort of continuous learning, and maintain transparency in any decisions that are driven particularly by AI, so it doesn't become a black box. And you're continuing to learn and innovate safely with end users involved as you deploy more of these intelligent technologies. But I guess just a note of optimism, maybe to finish on, I think these technologies, they offer us an incredible opportunity to change the perception of banking, maybe for many people, which is that it can be inflexible, that it can be one size fits all, that it doesn't understand me, that it can be infuriating to deal with from a service perspective. There's a huge optimization opportunity where service can feel more personal, products can feel more personal, but we've got to get that balance right about ensuring that we put the customer and that end human right at the center of that, rather than specifically be driven by kind of cost outcomes or efficiency outcomes. I think it's about getting the balance right.
Thank you so much. I think our listeners our audience can actually say what a great panel of experts we've had. Got a couple of questions that are coming in now. So the first one is from Jesse Bisika from Standard Bank, Malawi. Jesse, can you hear us? Okay, she hasn't got a question in the chat, but while she's thinking about what that might be, let me go over. Oh, there it is at the bottom. And it says, how can banks improve customer engagement in sustainability and ESG from a personal standpoint? And I guess I'd like to probably point that to you first, Anja, and then anybody else who would like to pick this up, because this has been covered in the topics we've discussed this morning, but I think it would be quite good just to have some focus on it from an ESG perspective.
I think it is a really good question and something that we are really focusing on. I mean, it's very clear and obvious for corporate customers that we can support them in how to transition, how to build a credible transition plan, and also provide financing for a customer's transition. So for the corporate customers, it is a very simple case where we can add value as a bank. For private customers, I would come back to the question of building financial resilience. So what we do, for instance, in Nordea is that we offer energy efficiency loans and loans to finance installation of solar panels, for instance. So this kind of activities that can help our private customers in reducing their risk towards changing energy prices, for instance, future-proofing their homes towards different climate and environmental changes. So this is one area where we are focusing on supporting our customers and helping them building their resilience. Then, of course, we have the dialogue with the customers around their preference when it comes to their savings and their pensions. Do they have a preference investing in sustainable funds, for instance? And what we are expanding into now is not just looking at sustainable companies or companies that are already come a long way in their transition, but some of our customers are also keen on putting their savings in companies that are a bit more immature in the transition. So saying that I want to invest in companies that need to change, and I want to be part of that change. I need to involve and show my engagement in companies that have a lot of work to do to reach their end goal. So I think that's also showing the interest from our customers in being more proactive in the sustainability transition. And in addition to that, I think it's also back to the customer's own footprint, of course. So there we can provide tools and solutions to calculate your own footprint and also analyze which actions you can take to reduce your footprint, which are the drivers for your own adverse impact on the climate and environment. So just to raise awareness, and we also have a lot of information out there for our customers to understand how they, as customers in Nordea, can contribute to the bigger picture in the transition by providing a capital to us that can go into our work with transitioning our corporate customers. So there are a lot of different areas, but I think it's important for private customers to understand what kind of difference it makes actually being customer in a bank that takes responsibility and has a high ambition in relation to sustainability, and that as a collective of millions of private individuals, banking customers, we can really contribute to a larger change.
Thank you very much. I'll ask quickly if maybe Karen, you might want to add to that, and I've got two more quite detailed questions that have just come in.
Oh, Heather, I completely agree with Anya. I think to geek out briefly, one of the best outputs from a tool called transaction categorization is the ability to estimate an individual personal customer's carbon footprint. So we're able to actually provide this in the mobile app to all of our customers and actually start to, I think, get to that broader consciousness and awareness and education piece around simple changes that they could make to improve and to help us on that route to net zero. But I was interested to see that Emily Shepherd from the Financial Conduct Authority has actually pointed to sustainability disclosure requirements. So I think we'll start to see this agenda continue to build momentum, Anya, in the UK anyway.
Thank you very much. So we have a question here from Brian Eddy, who's actually from the Equity Bank in the Democratic Republic of Congo. So we truly have a global audience of people who are really interested in this. And his question is, how can banks better balance innovation, including AI and risk management? I think these two questions really need to go to Sudeep and Paul. Maybe Sudeep, if you'd like to give your thoughts on this, followed by you, Paul.
I was in the meanwhile indexing more on the last question, which is where my mind was around mobile banks app security features. Maybe Paul, you want to go first on balancing innovation? I can.
Sure. Yeah. I mean, look. I mean, I think we covered some of it, didn't we, earlier? But I think I think from a sort of risk management perspective, you've got to have those kind of comprehensive governance and oversight structures in place. That might sound a bit bureaucratic, but I think it's important. So good AI governance frameworks that ensure AI models meet kind of regulatory and ethical and operational standards. That feels important. I think there is something about, periodically taking a look. So conduct those regular sort of risk assessments. I think it's important that AI models are sort of explainable and transparent. We talked about moving away from things being black box. So I think models that are transparent, that are interpretable, I think is really, really important. And I think the other kind of balance is that, as we said earlier, around the hybrid sort of human AI approach for decision making. I think that's where you can use the innovation, but make sure that you are managing the risk, if that makes sense. And I think that probably we didn't speak about it too much. Is that kind of bias mitigation and how you make sure that you've got controls around that seems to me in an AI world particularly important. So I think, as we said, these technologies provide almost limitless innovation potential. We work in a very regulated industry, and for good reason for much of the time. How we can let innovation bloom, but in a controlled way, in a risk managed way, is ultimately the puzzle that we all have to figure out, because as I say, the prize is a big one.
Thank you. We have another question here from Ramiz Ahmed. I'm not sure which organisation he is, but I know this is going to be a great question for you, Sadiq.
Yep.
How can AI support for online banking mobile apps security features? So I guess, how can AI support online banking apps and security features?
And I think all panelists would agree cybersecurity is no mean game, and it needs really experts to respond to this question with the right level of detail. But at a high level, I think one, it's a wonderful question, and AI can be used to minimize the risk of privacy breaches by encrypting personal data, reducing human error, detecting potential cybersecurity threats. AI improves security for mobile apps or otherwise by enhancing threat detection, response capabilities, and overall security measures through stuff like advanced threat detection and real-time monitoring, which traditional non-AI based cybersecurity tools will not be able to do. So AI can analyze almost on a real-time basis and on a predictive basis unusual patterns and behaviors, thereby, I would say, enabling early threat detection. The built-in AI in a mobile app can track and block suspicious transactions. The AI for banking applications also can block unauthorized block access to unauthorized channels and immediately inform customers and banks regarding fraud activities. So I think it is really the predictive capability based on pattern recognition that a trained AI model can bring, in addition to traditional cybersecurity, which is always embedded within mobile and other banking platforms. That is I would say, the wow factor that AI can bring to securitizing mobile banking apps.
Thank you. Would anybody else like to add final comments on that topic at all? No need, if possible, because I know that, Sadiq, you've done a really good short.
I'm now kind of feeling not so great about having volunteered for a very, very specialist question, but yeah.
You've done a great job in answering it. I want to check if there's one more question we could take from the audience. If not, I don't see anything. I think if not, I'd like to probably just end with first of all, thanking our amazing panel of experts for sharing their insights on a topic that's so important to us in the whole world of financial services. But also it's important to us as clients and also for employees. And one of the things that we see, which really excites me here, oh, we've got one more question. I'll go back to that in a minute. What I think is really interesting is how the inclusion agenda weaves itself right across this really important topic. So we know that this is not going to go away, right? And as the future goes and we enhance technology and everything that goes with it, we have to make sure that it's fit for all of the people that we want to service. Let me just go and look at the question here. Apologies, I'm going round and about, but they're flashing up on the screen now. And this is from somebody called Madhia from HBL, Pakistan. Apart from the challenges related to RPA technology, AI cloud, mobile apps, 24/7 availability, there is another challenge related to data. Oh, it's a quite long question. To data channel that is internet connectivity. There sometimes is a global disconnect due to optic fiber breakdown. How could the idea of technology work without first addressing the channel related issues? And I'm wondering if that should be one for you, Karen.
And I'm certainly happy to give my view. I think we've used data and AI a lot in this morning's panel, where clearly emerging technologies include digitalization. So I guess I probably just agree with Madiha to say you absolutely are reliant on optic fiber for performance. And given that you're, I think, Pakistan based, we can see that it has been improving in Pakistan, but even when I look at some of my global team in India, we are sometimes hampered by optic fiber performance and are working in partnership with most of our global locations to improve the accessibility to the net. I think it's important, and I will at this point go into a slight tangent to say I was fortunate enough to attend the Singularity University in San Francisco. And the point around access to the internet and access to this connectivity is that it actually brings more problem-solving minds online and to within access of our organisations. So know that I agree. I think that optic fibre performance is improving in Pakistan, but it is still challenging both in Pakistan and in India, which are the countries I have teams in, and that we're lobbying with the governments to actually improve that performance such that digitisation and the use of data in the cloud can then power AI, which then powers that customer experience and that inclusivity that we actually seek in our teams and for our customers.
Right, thank you. There's a supplementary question which I think might go to you, Anja, and it's to what extent do organisations need to educate customers about emerging tech so they understand both the potential and the limitations? Or to any of our panelists?
Yeah, well, I mean, I think we need to always make sure that our customers know what they are facing when they are dealing with a bank. So like what we do when for advice and for loans and for investments, we need to make sure that the customers know what they are dealing with. And this is also in relation to GDPR and their sharing of data. So there is a lot of education we need to provide to our customers for them to make informed decisions and also be aware of any risks related to sharing information and also providing information through digital channels, etc. This is maybe not specifically for banking. I think it's general for different digital channels. We contact so many different companies and banks through our computers and our cell phones right now. So I think in general, there's a need for society, for individuals to understand better what that means and how you can be exposed to cybercrime and other threats by using digital channels. So what we have a special focus on this in Nordea towards our private customers, making sure that they are also resilient and aware and suspicious when it comes to contacts that might appear as coming from a bank, etc. So there's a lot we can do, making sure that customers are aware and that they understand risks and challenges, and how quickly society is changing in terms of technological development right now, that it's good to ask an extra question if you are not sure about where the question is coming from and what is the purpose of you providing information.
Right, thank you so much. And in the interest of making sure that we finish on time, my final thoughts for today are really that AI is part of the future, it's part of our future. And the way that we do business and the way that we work with our clients and work with our employees, we've got to make sure we've educated them, but we're also making sure we're taking them on the journey with us. So that's important for us to remember. I really want to say a huge thank you to the audience for your questions today. You've definitely kept us on our toes. And to the team behind the scenes, the Chartered Banker, who have helped us through one of the most challenging mornings in terms of technology. But we've been able to go through it. And what I think is great is seeing the experience and the patience of the panel as they work through this whole morning. No one would ever know some of the things that have gone on behind the scenes, but being experts and professionals in this matter, the focus is making sure that we could provide you with a great session this morning. So I just want to say my final thank you to the audience is my panelists is thank you so much for your time. These things don't happen with us just turning up. There's a lot of research behind the scenes to make sure that we give everybody the questions that the answers that they need that are relevant to them, but also, you know, for us, we're talking about something we're really passionate about and how we care, and we're driving things forward. So I just want to say a huge thank you to you once again. And I think that's the end of our morning session.